Hello, trader. So, those of you in the 6 month Elliott 12 program, okay? This week, I did explain to you guys on that of how to be able to mark up your base channel. Now, what you guys need to understand is that base channel is a pattern in that of what Elliott wave principle. Okay, so it helps us to leverage on that of the fifth wave. That's what base channel usually what help us to do. Okay, now this base channel is just a formation of patterns, right? Now, what you need to have when it comes to that of base channel is that you need to have wave 1 and wave 2, right? The wave 1 and that of wave 2 are what you're going to use to label that of what? The base channel, right? Now, this base channel, the breakout of that of wave 1 above the parallel channel that you did draw will tell us that this is the obvious bullish word strong momentum of that of third wave that goes upward. Note, we are not using the base channel to leverage the third wave, okay? We only use it to leverage that of what? The fifth wave, okay? I've explained to you guys several ways of leveraging on that of wave 3, which is this, okay? Endpoint of wave 2, which end at 50% or 61.8% of what? Fib retracement levels. That you can use that to enter the third wave, okay? But the base channel, it is being used to leverage on the fifth wave, okay? These are trade I did call out. This one is this year, okay? On that of the USD, you can see March 28. You can see it here, right? The power of what? Base channel. Also, this is March 09. You can see this is gold, the power of what? Base channel, which is what I'm going to show to you now. Okay, now like I said in this write-up, I said to you, base channel is a set of parallel line drawn using wave 1 and wave 2 of an impulse wave sequences. Okay, impulse is the same thing I mean by that of what? Motive wave. Okay, it helps us to visualize the initial strength and length or likely path of wave 3, right? How to construct a base channel? You draw from the first trend line, draw the first trend line from the origin of wave 1 to the end of that of what? Wave 2. Then the parallel line from the end of wave 1, okay? This is what I mean by that. Let me show you guys that, okay? Now, if you look my screen here now, you can see this is a what? A plain screen now, right? Now, this is the parallel channel that we use, okay? This, let's assume this is wave 1 now, wave 2, right? We don't have that of wave 3, wave 4, wave 5 here, for example now. This is wave 1 and wave 2. Let me make this, let me remove this, let me use this. Wave 1, wave 2. Then we believe wave 3 will go upward, right? Now, this parallel channel, this is what you use. Parallel what? Channel. The tools I usually use, right? You're going to click from the starting point of wave 1 to this end point of wave 2. Then you place it above like this, okay? Now, our belief is that this wave 3 is going to break upward like this, right? Now, the break above that of this parallel channel signifies to us that what? This is the obvious what? Bullish momentum, obvious strength, right? In it. Now, we believe that this parallel channel, in order for us to leverage that of the wave 5, we expect it to come back downward like this, to come and test this area here. Then we'll look for opportunity to buy the market upward. Now, if you pay attention to this, you can see that the rules of waves are not broken, right? The starting point of wave 1 is this. Wave 2 end where? Here. Wave 3 is not the shortest. Likewise, wave 4 did not overlap wave 1. All these need to be what? In place. So if, let's assume that that of your parallel channel, the reversal of the price came downward to these levels here, to the end point of wave 1, it is also what? It is not right. It is wrong. Okay? We don't expect wave 4 to go below that of what? Wave, the parallel horizontal upper parallel line of that of this parallel what? Channel. Sometimes you can have a spike below it, but in as much it still move upward above it, is still what? Is still intact. Okay? So this is used as the starting point of wave 1, wave 2, then wave 3, then that of what? Wave 4. Why this is what? Wave 5. Now, in the case of having an entry, how do you leverage on that of this? you can always use your free retracement level to mark up your entry point, and that, excuse me, your target levels, and that of what you use as your what entry point, using Fibonacci level to know the endpoint of each wave. Okay, I did something like that. Let's go back to history. So that was earlier this year. I did on that of good. Let's go to this. Let us remove all this. Okay, we don't have this yet now. For example, this is my starting point of a way of a new count, which is this, right? My starting point of a new count, right? A support levels, right, on that of this higher time frame. So this is my wave one here, then wave two, right? Wave three, wave four, wave five. Note, we don't have this wave five when I call out the trade, for example. Like I said, we use it to leverage that of what? Wave five. Now, you have to place your parallel channel. You draw from the starting point of, drag the parallel channel from the starting point of wave one to the end point of wave two, and to the end point, to the up end point of that of wave one. Now, look, do you see it here? So this is the end point of that of wave four. So this is an example of a what? A parallel channel. So a lot of you guys that don't understand, please always ask question. If you notice, when price came to test the upper trend line, it did what? Rejected massively upward. So if you apply the fib retracement level, there is possibility that this can be that of what? 23.4% ratio. So let's apply it and know the endpoint of all this wave. Okay, to know the end point of wave two, click from the starting point of wave one to the end point of that of wave one. You can see that this end where 78.6% what? Fib retracement levels, right? You can see it here. Or we can as well use 61.8% ratio. Like I said, Fibonacci retracement or fib extension, they are just guidelines, they are not strict rules. Okay, now you can see the endpoint of this, which is this, so we can use any of the two. Now I want to know the endpoint of this wave three. Click on your fib extension from the starting point of wave one to the endpoint of wave one and to the endpoint of wave two. We want to know the end point of wave three. Now, if you notice here, this also end where 200% what? Ratio, which is what? Is also intact, right? Now, we want to know this end point of wave three here. Wave four, excuse me. All you simply need to do, click from here, from the low starting point of wave three to the end point of that of wave three. Now, did you see where it ends? The parallel channel, the wave four. You can see that just a little bit close to that of what? 38.2% ratio. You can always adjust it, right? So this is the end point of wave 4. You can see that is intact. So parallel channels are used to leverage that of what? Wave 5, right? The wave 3, you can leverage on it. This is a trade I call out January. I call out this trade around somewhere here January. That you guys, that's the one we have that of what? And triangles. This formation here is that of what? Triangles before this parallel channel formation. So the reason why I ask people to add entry is because of that of what? This parallel channel. Now also you need to understand that the most common parallel channel in the whole market is that of what? Bullish scenario. I rarely see a bearish what? Scenario of that of what? Of parallel channel. Excuse me, of a base channel, excuse me. So base channel, the most common that of what? Approach is that of bullish scenario. So I rarely see that of what? Parallel, the base channel of a bearish count. Okay, so the most common one, which if you notice here, you can see here, here's another opportunity I did call out on that of what? Euro USD. The same approach, you can see it here. Now let's go to this Euro USD. This is it here. This is the starting point of a wave count, right? This is daily time frame, right? Starting point here. Though this, on this here, we have what we call that of, on this, we have that of a larger degree. But I want you guys to pay attention to these levels here, okay? This whole area here. You can use any of the two, but I just want you to see what I'm doing now. So this is the starting point of wave one, which here, then that of what? End point of wave one. This levels here, excuse me. I'm coming. I think I need to adjust this, make this downward. Okay, let's go to this. So bring it up a little bit. Okay, you can see this. So do you see this? Okay, wave one, wave two, then wave three, wave four. So it is because of this what this base channel I did what leverage on this also. That was March this year, right? So a base channel, it is used to leverage that of what the fifth wave. If you all pay attention to this, you can see that I did not take that of what the third wave here. I only leverage on that of what the fifth wave, buying the market where upward. Likewise on this also, I leverage on the what the fifth wave. Okay, we don't use it to trade that of what the wave three. Likewise, we don't use it to trade, we don't trade wave two or wave one. So it is only the fifth wave we use base channel to leverage on. Okay. Now also that was 2020. I also leverage on the same approach. You can see the starting point of wave one, yeah, to the end point of wave one and to the end point of wave two, used as what the markup of the base channel, right? You can see the breakout, then retest of it, a little bit spike downward, then went back upward. Look at the result what after. So this is the power of what a base channel. Okay. Now things you can have are that of the waveform. You can have several formation. It can be complex, it can be easy. Your priority is that it did not overlap what wave one. It did not go below that of what this upper trend line that you did what draw in that of what the base channel. So if you have any other question over the weekend, you can always reach out to me while we have the class. I will explain in details to you more also. So thank you.